What is InstaLend?
We're a mortgage lender. We lend to landlords or anyone that's looking to buy an investment property, fix it up, and then maybe sell it or rent it out. We're nationwide. We lend for short-term loans or even longer-term DSCR loans.
A lot of people, when they first get into the real estate game, they typically think that my only place to get a loan is a bank. And yet here you are, a private company that's helping bridge that. What sets you apart from a bank? And at what point should real estate investors consider working with you rather than a bank?
If you are an investor, you're looking to do this, as an entrepreneur, then the last place you want to go to is a bank. For a lot of these reasons, I think working with a private lender like ourselves is beneficial. We're also fast. We typically close in 10 to 14 days. A bank could take, up to 90 days to close.
How do you look at risk differently? How do you approach and manage risk differently from a bank?
There's multiple ways that private lenders like ourselves have the flexibility to look at a loan and identify strategies to recoup our money should the client not be able to pay it back. I think with a bank, it's a little different.
So if you have access to institutional capital, what are the typical rates? Do they require rates that are higher than what I would get at a bank, or are the rates competitive?
The rates are surely higher than what you get at the bank, but that's because this capital has an entrepreneurial mindset to it. We understand that when you get access to a good deal, time has to be your best friend. And so any seller who's giving you a good deal on the acquisition is going to want to close as soon as possible. And so the sooner you close, the better it is for you. And that's where we come in. InstaLend, we typically close in 10 to 14 days. And so that allows you to make sure you win the deal. You make your money on the buy, which is the number one rule in real estate. And I think that is a bigger selling point for our clients as opposed to trying to save 1% in working with a bank, which could be cheaper cost of capital than us.
Where do you see the most activity in the United States, and what's your outlook on the real estate market in general?
So we're very bullish on real estate, and we're seeing a lot of demand in the Midwest. There's some pockets actually very few pockets where property values are still, within $100,000, $200,000, $300,000 range.
What does the next 5 or 10 years look like for you and for InstaLend?
I think the industry is just getting started in terms of private capital that individuals have access to. Most folks are not even aware of the fact that there's private investors or, companies like ourselves, known as hard money lending, right, that they can reach out to. So they've been working with banks, but I think there's an opportunity for each and every entrepreneur out there in real estate to scale their business further. And I think the more knowledge they have in terms of knowing where to reach us or someone like us to get access to that capital, there's more real estate they can target to acquire and, continue building that portfolio.
This is the Money Seed Podcast, where we discuss all things investing, plain and simple, the way it should be. Please remember, this show is for educational and entertainment purposes only and is not intended to be investment advice.
Welcome back to the Money Seed Podcast. My guest today is Sohin Shah. Sohin is the co-founder of InstaLend. InstaLend is becoming a big player in the private lending space. Sohin, welcome to the show.
Thanks for having me, Gabe.
All right, Sohin, give us the elevator pitch. What is InstaLend?
We're a mortgage lender. We lend to landlords or anyone that's looking to buy an investment property, fix it up, and then maybe sell it or rent it out. We're nationwide. We lend for short-term loans or even longer-term DSCR loans. And we've been doing this for close to 10 years now.
Amazing. I believe you started in 2015.
Correct.
Tell us a little bit about your growth. I think the last time I checked in on you guys was about a year ago. And you guys had well past the $1 billion mark in terms of loans generated. Where are you nowadays?
Yeah, I mean, it's been growing rapidly, and we're seeing just the demand grow each day. It's not something we're able to keep up with, to be honest with you.
Amazing. So let's start at the very beginning. A lot of people, when they first get into the real estate game, or some of them get into it accidentally, where they buy a new house and they start renting out the previous home instead of selling it, or they want to first get their first rental property or their first Airbnb. They typically think that my only place to get a loan is a bank. Really, the only place I can get a loan is a bank. And yet here you are, a private company that's helping bridge that. What sets you apart from a bank? And at what point should real estate investors consider working with you rather than a bank?
Yeah, so it could be me or it could be any other private lender. But I think if you are an investor, you're looking to do this, as an entrepreneur, then the last place you want to go to is a bank, because a bank is going to ask you for W-2s, pay stubs, They're going to underwrite the debt to income ratio for you as an individual, whereas what they should be underwriting is the property, which is going to be the collateral. That's how we underwrite loans, right? So if you come to us, I would want to get an appraisal on the property, understand what it's worth, and I'll probably give you 80 or 90% of the purchase price, depending on what your exit strategy is. And that's what we care about. So an appraisal on the property is typically what we need. And then we allow you to use an entity like an LLC or a corporation to buy the property, which acts as an additional shield from liability for you, right? I don't know how banks look at that. I believe a lot of them would prefer that you acquire the property under your personal names. For a lot of these reasons, I think working with a private lender like ourselves is beneficial. We're also fast. We typically close in 10 to 14 days. A bank could take, up to 90 days to close.
Yeah, I think you said a lot there, but maybe let's start unpacking it one by one. So typically, like you said, a bank will underwrite a loan based on the property value, right? How much equity can the bank tap into in case the worst happens, which is you can't pay the loan back. Bank will say, that's fine. If you can't pay the loan back, then the bank might repossess your property and sell it and try to recover the loan that way, or they might try to maybe go after your other assets or something. So they look at your income. How likely are you to be able to continue making mortgage payments? How much equity there is in the home? What if the home price drops by 20%? Well, they're still covered. That's why they go for, 80% loan to value kind of thing. How do you look at risk differently? How do you approach and manage risk differently from a bank?
I mean, look, eventually we understand that there's a lot of individual investors nationwide who want to do this to build passive wealth, right? And that's the whole idea. Individuals like myself, I started flipping a home as well at some point and realized that there's no access to capital which empowers this. So that's the idea with which we started InstaLend. And the way we look at underwriting is if there's value in the property, then there's multiple ways to recoup your money should the client not be able to pay you back. It can either be fixed up and sold on the open market, or if we have patient capital, right? What we can do is get it rented out to a tenant and then make sure it serves as a cash flowing investment for us. So there's multiple ways that private lenders like ourselves have the flexibility to look at a loan and identify strategies to recoup our money should the client not be able to pay it back. I think with a bank, it's a little different. For them, it's, if you default, they want to sell the property to recover whatever they can. And if they don't get made whole, then I think it's just a different nightmare that they deal with.
So let's look at, I think you have 5-6 different type of loan products, but let's look at the simplest one. Let's start there, which is what most people are familiar with, which is if I'm going to buy a single family rental, if I'm getting a loan in my personal name from a bank, I think most Americans are familiar with like, okay, it's going to be a 30-year mortgage term, fixed term, whatever. I've gotten loans from banks using an LLC, and it's interesting how banks start treating you differently as soon as they realize that you're buying under an LLC, not your personal name. So right away, like the terms change. It's no longer a 30-year, 15 or 20 year. Now all of a sudden, maybe the rate isn't fixed for 30 years. Now it's maybe only fixed for 5 or 10, that kind of thing. So things start to get a little bit different, a little bit varied as soon as you start saying LLC and commercial loan. How do you approach it? If somebody says, Sohin, I'm interested in buying the single family rental as an investment property, what kind of terms can you offer, and what are the different ways you can structure that loan?
So for every rental loan, we have a 30-year loan term. That doesn't change. And then our interest rates are, around 7 or 8%, depending on a lot of different factors, like, your credit score, which should be 660 or higher. The better your credit score, the lower your interest rate. We also look at what's known as a debt service coverage ratio for the property, which is essentially, a computation of what are your expenses each month once you acquire the property, right? You're going to be paying for mortgage, interest on the mortgage, portion of the principal payment. You'll probably be working with a property manager. You'll have annual insurance, annual taxes. We account for all of that. We look at how much rental income you'll be making. And then whatever the delta is between the two is what you take home. So that allows us to compute the debt service coverage ratio. The higher that ratio, the stronger your cash flow is, and the lower your interest rate would be with us.
And where do you typically source your capital? Do you also work with individuals or high net worth individuals or companies who have excess capital that they're looking to lend out? And do you just connect capital with investors, or do you use your own capital as well?
No, so we have institutional capital that we have access to from Wall Street. It's because we're based out of New York that, that becomes a little easier for us, but we do not work with individual investors.
Amazing. So if you have access to institutional capital, what are the typical rates? Do they require rates that are higher than what I would get at a bank, or are the rates competitive?
The rates are surely higher than what you get at the bank, but that's because this capital has an entrepreneurial mindset to it. We understand that when you get access to a good deal, time has to be your best friend. And so any seller who's giving you a good deal on the acquisition is going to want to close as soon as possible. Otherwise, he's going to be pounded by other potential buyers who will say, hey, I'll give you a better offer. And so the sooner you close, the better it is for you. And that's where we come in. InstaLend, we typically close in 10 to 14 days. And so that allows you to make sure you win the deal. You make your money on the buy, which is the number one rule in real estate. And I think that is a bigger selling point for our clients as opposed to trying to save 1% in working with a bank, which could be cheaper cost of capital than us.
It's incredible. I mean, 10 to 14 days, that sounds quite incredible. I think with banks, you're typically looking at 30 days or more. But let's say in case of 14 days, walk us through how does that process work? Because it sounds like you have to get an appraisal, you have to do your cost analyses, or what you mentioned is debt coverage ratios, et cetera. You have to secure the capital. What does the process look like in 14 days? How do you manage to squeeze all that in there?
Sure. So the number one document we need from you is a copy of your signed purchase contract, which helps us understand you actually have the property under contract. What we do then is order an appraisal on the property. An appraisal can come back in a week or less. Once we have the appraisal, we have everything we need to underwrite the property. While we are waiting for the appraisal, we will run a soft credit check on you and a background check on you just to make sure it's within our guidelines. We will ask you to share your LLC documents or your corporation documents with us so we can make sure it's in good standing. And then we ask for your last 2 months bank statements just to make sure you have enough capital to put down towards your down payment. Once all of these documents come in, we can complete underwriting within 24 hours. And we approve the loan, on the 8th or 9th day. And then we're waiting for title to make sure it's come back clear. So title work can take a few days here and there, which is why I go up to 14 days for closing.
That's amazing. How are you leveraging technology? I mean, what you just described sounds quite like a laborious process. And I don't know how big your team is. Maybe you can talk about your team size, but how are you leveraging technology to make this fast and seamless?
So we're a very lean operation and all of our business is done online. We lend nationwide, but we only have one office, which is in New York. And the reason we're able to do this is all our loan applications come in through our website. Post-closing, any draw requests for construction loans come in through our website as well. All of the servicing is done there, payoffs, etc. So that allows us to be less intensive with human capital and more technology friendly. And it's allowed us to scale to the reach that we've gotten today.
Maybe describe the different types of loan products you have and where do you see the most activity? Is it fix and flips? Is it bridge loans? Where do you see most of your clients?
Yeah, so the different loan products we have are the fix and flip loan, which is type of loan you would take if you wanted to acquire a property, fix it up, and then maybe sell it on the open market. There's a lot of TV shows on HGTV or other channels, which entice people to do this. And then we have a rental loan, which is essentially if you want to be a landlord and have a tenant, right? You could either be looking to acquire a property or you already own a property and you want to refinance with us. So that's more long-term, where we give you a 30-year loan. You have a tenant in the property and you're earning cash flow each month. From that cash flow, you're paying a portion of our loan along with interest, and then you're pocketing the difference in your bank. We also lend across portfolios. So if you're looking to scale operations and buy 10, 20, 50 homes at a time, we can help you with that under one blanket loan. And then we lend on multifamily properties as well, up to 9 units right now. Lastly, we do new construction loans. That's only for 1 to 4 units. And again, all of our loan products are nationwide.
So that's quite incredible. When you talk about construction loans, though, I always felt like construction has a little bit more risk, right? Because you don't really know how much it's going to cost to build that property. I mean, you know how much land costs, or maybe the land is already purchased when you start working with your investor. But in terms of construction costs are an estimate at best. You don't know how long it's going to take, et cetera. How do you mitigate risk with construction?
That's a great question. I think a few learning curves for us have been, number one, making sure that whoever is the investor has the experience of having done a construction loan before and having paid back in the past. If that is not the case, then we mandate that they work with a licensed GC, because they're probably flipping a home for the first time and they may not know what kind of permits need to be pulled, what the timeline could be for that, what to budget in terms of different line items. So having a professional like a licensed general contractor guide you on the same can can turn into peace of mind. And that's what everyone's looking for here. Number two, I think it's a red flag if the investor lives in a different state and is trying to get construction work done in a separate state. So I think what we encourage is making sure you're within driving distance of the property. Should something go wrong with the construction work, you should have the ability to visit the site and try and find solutions, put together another team and, try and brainstorm. These are some of the measures we do take. Outside of that, anyone who might be a GC themselves or a licensed realtor is already savvy with real estate, so that helps. But we do see a lot of first-time investors as well, someone who's not done this before. And we encourage them to not go in with a gut rehab. Probably buy something, do minimal work on it, and see the value appreciate and then sell it. And this way you've gotten some experience, and then you can probably try and take on a little more intense rehab job on the next deal.
Earlier, you said that, for example, you don't necessarily need income requirements, right? You're just basically, you can evaluate a loan based on the performance of the property itself. What are some other advantages that you might have over a typical bank loan?
I think, not looking at income, making sure we allow you to use an entity to acquire the property, closing fast. And I would say we work with local appraisers, right? So they're knowledgeable about the property values. Most banks will go through an AMC, appraisal management company, and that can, of course, slow down the process, but also haircut the value on the property, which is not something we do. So we work with local appraisers. They're knowledgeable about, what the trends are in that particular neighborhood. And we typically see them be fair in terms of values as well.
Since you work with people all across the country, I think you have a good insight into, which parts of the country are doing really well in terms of the real estate, where real estate is booming, where it's maybe slowing down. As of right now, and just for the record, it's February of 2025, where do you see the most activity in the United States, and what's your outlook on the real estate market in general?
Look, we're very bullish on the market. That's why we continue to be in business as well. Because a lot of the loans we make will help the property value appreciate maybe a year from now, right? So there might be limited value in the property today, but we still have the conviction to make a loan against the property because we do believe this value is going to go higher. And so we're very bullish on real estate, and we're seeing a lot of demand in the Midwest. There's some pockets actually very few pockets where property values are still, within $100,000, $200,000, $300,000 range that you can buy a 1 to 4 unit. And that's not the case everywhere else. So Ohio, we see a lot of activity in Ohio. We're seeing activity in Chicago and Detroit as well, even though crime rates are also higher there. And then I would say Tennessee and a few other states.
Typically, what do you look for in a client? Like if someone were just to call you up today and say, Sohin, I saw you on the internet, I'm interested in getting into a property. Do you look at anything other than the property itself? Do you have any requirements for the individual?
Yeah, I mean, just making sure that, they have a credit score of 660 or higher and no bankruptcies or foreclosures against their name in the last 4 years, because those could be disqualifying factors for us. But outside of that, we don't really have much.
How has the business been in general? Has it just been consistent growth? Have you had slow periods or hiccups? Maybe how was COVID? Just tell us a little bit about the history of the growth that you've seen.
Yeah, I mean, there was a huge growth during COVID and it sort of sustained post-COVID as well. I think we've seen a shift from fix and flip being a number one product to the DSCR rental loan as well now. Just given the high rents that landlords are able to charge nationwide today, a lot of people are attracted towards being a landlord. And so we've seen new investors come in, raise their hand and say, hey, I want to own a property. I want to be a passive investor, be a landlord. I understand how the system works and I want to make sure I have dry powder. I want to invest it towards a rental property. And we're seeing a lot of W-2 income generators do this as well, right? They have a stable job, they're working, and they're deciding to start owning single-family rentals nationwide now. And they're using us to finance these.
Amazing. Yeah, and I think that's an excellent addition to anyone's portfolio. Add a few single-family home rentals in there. It's a great way to balance out your portfolio, maybe diversify some risk away from the market, etc.
Yeah, you think about it, right? You're making monthly income in terms of cash flow. You can depreciate a portion of the property against income each year. There's also appreciation in the property value that you can benefit from. Maybe you can increase the rents every year as well, or every few years. So that leads to higher income. And because you're paying a lender like ourselves a portion of the principal each month, you end up owning more equity in the property each passing month. So, typically, I think 30 years from now, you end up seeing very high internal rates of returns on investments like these, IRRs.
Absolutely. The other thing I really enjoy about real estate investing is right now, it's very expensive to build a home. So if you can get it into a home right now, where you mentioned you're buying a house right now, you're renting it out, it's cash flow positive every month. There are a lot of places in America where you can buy a house that it's significantly less than what it costs to build the same house brand new today. So it's almost like there's a floor on the value of that house, right? It's not going to be cheaper than replacement cost for a long time. At some point, those two will have to equalize. So I think long term, there's so many good reasons to be in real estate.
I agree with you 100%.
What does the next 5 or 10 years look like for you and for InstaLend?
I think the industry is just getting started in terms of private capital that individuals have access to. Most folks are not even aware of the fact that there's private investors or companies like ourselves, known as hard money lending, right, that they can reach out to. So they've been working with banks, but I think there's an opportunity for each and every entrepreneur out there in real estate to scale their business further. And I think knowledge will go a long way. So if they understand they have access to this form of capital, they should be able to put together a team of trusted individuals and scale their operations. And I think we're seeing more and more folks do this successfully. So the game plan is to acquire properties, not sell, because that's when you are hit with a tax event, and hold it for 30 years and continue building a portfolio of assets. And they need patient capital like ours, which is entrepreneurial in nature, to back them. And I think the more knowledge they have in terms of knowing where to reach us or someone like us to get access to that capital, there's more real estate they can target to acquire and continue building that portfolio.
I think that's such an important thing that you just mentioned there, which often gets overlooked about real estate, is you can always refinance a property, take some money out. It is not a taxable event, so you get that cash tax free. You don't have to wait until you're 59 and a half years old to access the value, unlike your 401ks, IRAs. So it's there, it's available, you can access it tax free. So there's a lot of really good advantages with real estate. I'm glad you brought that up. So Sohin, where can people reach out to you and learn more about InstaLend?
Yeah, so our website is instalend.com. If you have a property you want us to lend on or issue terms on, just go to apply for a loan tab on the website. My email is sohin.shah, that's my first name last name, at instalend.com. Feel free to send me an email. My cell is 917-435-5308. You can reach out to me there as well.
Perfect. I'll add those into the show notes. Sohin, Thank you very much for joining us today.
Thank you for having me, Gabe. Appreciate it.
Hey, thanks for joining us for another episode of the Money Seed Podcast. Please remember to click like and subscribe. It really helps spread the message to other investors and it helps attract new viewers to the show. We appreciate your support. Thanks very much.